Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I will be going over the project's results for the month of August. If you're new to the channel, the whole project's goal is to leverage debt to make a monthly income. It will make more sense as we go further along. If you find this content interesting or entertaining, don't hesitate to press that like button, subscribe, and leave a comment. Let's get started. When looking at the Robinhood portfolio overview, the reason why I show this specific screen is to show my audience that I'm actually doing the strategy. I'm not making up numbers like some YouTubers. So once we have that out of the way, now let's show proof of the actual distributions for the month of August. So for the month of August, my highest performing YieldMax fund was NVDY. And so I had 4,847 shares. The distribution rate was $1.25. And then the total amount paid to me was $6,065.78. For AMZY, since I had 1,144 shares, the amount paid was basically 47 cents, and then I got $541. That was definitely a sad number. I wish it was more, but you know, it is what it is. And TSLY, since I had about 1,162 shares, it paid about almost $1 distribution per share. And then total amount I received for the month of August for TSLY was $1,123.47. Another number I'm going to look at over here is the Robinhood margin. So for August 6th at 9:20 p.m., I was charged $383.14 for borrowing about $75,000 in margin. All right, now that we're looking at the spreadsheet, I'm just going to go over the starting variables of when I started the project. So if you're new, you can kind of follow along of where we have made the progress. So starting off, the HELOC loan I borrowed was at $83,104. After August payments, I literally just got paid. So once I actually move this money over, it will go down. The loan amount will go down to this number. My average monthly HELOC payment is about $796.82. Robinhood Gold is about $5 a month. And I average about $400 of Robinhood margin. As you saw, it was only $383 for the month of August, borrowing $75,000. I currently am a high income earner, so my tax rate is 35%. I initially had it at 37%, but I realized I wasn't that high of an income earner. So I bumped it back down for all of my numbers to reflect 35% and not 37%. When I first started this project, I had 1,105 TSLY shares. I currently, after this month's premium, bought 1,200. I now have 1,250. When I first started, I had 4,681 NVDY shares. Now I have 4,914 shares. So about, almost 250 share increase in 3 months. And then for AMZY, I had started off with 1,101 shares, and now I'm at 1,158. And then for the core foundational holdings, when I first started, I had $0. And then after this month, I have about 1,800. When I first started this project, I had $102,355 in my Robinhood. I had only $87,000 this month. We all know the last, 2 weeks, the stock market was just absolutely pounded, and is definitely a reflection, but this number isn't as bad as you think it is. So from this project alone, I have paid off about $15,000 of this loan. So that if you just combine this $87,000 of what's currently reflected with the $15,000 loan I paid, that brings up the number back up to $102,000. So I'm pretty much even right now, even though yes, I am down. I will admit it, but this number isn't as bad as you think it is. And for me, I don't necessarily care about the account value. I really care about how much monthly income I'm grossing. But now that we got all of the starting variables out of the way and you see significant improvements, I'm going to talk about a couple of new things I added to my strategy. All right, so for my strategy, I've been doing a 50-50 spread with AMZY. So basically this means that of the $541 I received in AMZY, I'm going to split 50% of it is going to reinvest back into AMZY, and then the other 50% is going to go into a core foundational holding. What I view a core foundational holding is SPY, SCHC. So something that doesn't really, change in value much, so that eventually later down the line, once this pile of money is creating is big enough, I'm going to borrow against it to then buy more YieldMax shares. And in the event that there is a huge market turn, like what I'm observing here, I'd be able to just sell off the YieldMax funds, basically cut the fat, and then I'd still have something left over. So this project wouldn't be a total failure. So that's kind of my thought process behind the 50-50 strategy. For the 75-25, the whole point of the 75-25 model is I'm trying to pay off this HELOC loan as fast as possible. So 75% of the distribution is going back towards paying off the HELOC loan, right? And then the other 25% that's remaining from that NVDY distribution, I am paying to reinvest back into NVDY, right? And then, so this is where, so the next thing I'm looking at here is the TSLY full send 100% reinvestment. So I was thinking about this the other day, and I was like, man, whenever I did my estimations for YieldMax funds, the sexiest numbers I received is when I reinvested 100% of the distribution. So I was thinking, you know what, I might have a sacrificial lamb in TSLY where I reinvest every single dollar back into TSLY to see how far my premium could push up just by reinvesting 100% of the share or 100% of the ETFs. And so technically, I bought TSLY with my own money. I put about $22,000 into TSLY. So I would be willing to sacrifice $22,000 for this experiment to see if this actually works or not. So that's why I'm different than everybody else. All right. This other number here, maximum, I cannot go higher than a 75% margin rate in Robinhood. There are caveats to this, and I'll speak to them later. Another strategy is I do quarterly reviews. So basically, I've had 3 months of data, and I am basically not going to change anything in my strategy right now. I'm going to keep everything status quo. I made some minor changes with TSLY where I'm reinvesting 100% instead of doing the 50-50 model. And I think that's going to be the best way moving forward. So in 3 months, we'll see if I increase my margin rate or whatnot. But as of right now, I think I'm very content with how this project has gone with its performance. So the next thing I wanted to talk to you guys about was actually about the ex-dividend date and the distribution date, how they're about like one day different. So I was thinking about this the other day. Actually, I lost sleep over this about 2-3 days ago, where I wanted to save money by always buying on the ex-dividend date, but I didn't think that'd be possible. So I thought I would have to lose basically a month of premium to buy on the ex-dividend date. And yeah, so basically I was thinking that I would lose out on potential gains for next month if I bought on the ex-dividend date. So what I would basically lose a month of premium because you have to like lose a month to get the next ex-dividend date to get the payout. So what I came up with is on the actual ex-dividend date, whatever the numbers that are coming out for the distribution yield, like $1,100 from TSLY, the $6,000 from NVDY, the $541 from AMZY, I actually am going to start just buying this exact same value with margin on the ex-dividend date. So basically what that means is for TSLY, I bought $1,123.47 of TSLY shares on the ex-dividend date because that's the cheapest date you can buy these shares. And for NVDY, since I'm doing the 75-25, I only bought 25% of 6,000. So I only bought $1,500 on margin of NVDY shares. And the same thing with AMZY. So I only bought 50. Well, because I'm doing the 50-50, I basically put 50% into AMZY and then 50% into SPY, which SPY didn't really matter. But for AMZY, I did get the shares on sale because I bought them on the ex-dividend date. So I actually did the math with all of these numbers combined. It was about, $3,000, and $3,000 is going to cost me for 1 day to borrow is 57 cents in margin, right? But if you look at the math, how much money that you're going to gain by buying these shares at a lower price, for that $3,000, you would save $176 of share price, right? Because in theory, let's go back to like NVDY for a second here, right? NVDY shares on margin. So I bought 1,500 shares because I know on the actual distribution date, it's gonna go back up, right? So I want to buy the shares here before they go back up, so I don't buy them at an expensive rate, right? So I just use margin to buy them. And then once the payment actually hits, like today, once the payment hits, it cleans out the margin automatically. And then I bought these shares for $176 cheaper than if I would have just bought them actually today after I've got paid. So you might think $176 is pretty much insignificant. But if you do this over a 12-month period, that's about $2,100. And then over 30 years, that's $63,000, somewhere around there. So I'll put it this way as well. If you're only buying a small amount of shares, like 1 or 2 or 3, this might not make sense to do the whole margin thing and whatnot. You'd still be saving money, but is it really worth the squeeze? That's debatable. But if you're significantly buying thousands of dollars of shares, or maybe tens and 20s of shares, this strategy makes perfect sense. So let's go back to the spreadsheet. So I know you guys are dying to look at the numbers, but I have one more thing I need to talk about, maybe 2 more things in this section, and then we'll get to the numbers. So I talked about buying the shares on margin on the ex-dividend day and then leave it alone so that the margin pays for it, or the distribution pays for it later. So we just talked about that. I've been doing this thing called profit hit and runs. Basically, whenever I see, NVDY take a dump, like, I don't know, it goes down $1, goes down $2, I will buy on the dip and then just sell at the high. I don't want to run calls of this because I don't like the whole expiration date. Sure, you can make more money, but I think this way is a little bit safer by just actually buying the shares and then selling them at a profit or not. So by doing this, I've ran it on NVDY about 4 times. So what this spreadsheet means right here is I did the first hit and run I did. It was in late July, July 30th. I bought this price at $23. I bought NVDY at $23.97, bought 100 shares, and then I sold, and I did a limit sell of $24.97 of 100 shares. So I basically made $100 in about a day's work, right, for a couple of minutes, right? And then I bought 3 more shares of NVDY. Then I did the same thing, but this time I used SPY. I did a call on SPY. So I basically bought it at $1,279, and then I sold it at $1,400. So basically, whenever there's a significant dip, I'll buy a call, or I'll buy 100 shares of it, and then once it goes back up, I'll sell at a minimal gain. So I'm not looking for a home run here. I'm just trying to do a bunch of small little ins and outs of the market so that over time this is going to compile, right? So basically did the same thing August 5th. I did a longer call for SPY. So I bought a $3,100 call that expires January 2025. That's still playing out. It's definitely been rocky because the market took a massive dip. And I'm waiting for that to go back up. And we'll see if I make money or lose money on that. And then same thing in the NVDY. So I basically bought 200 shares this time at $23.12. The second it goes up to $24.12, I would have made, $200. Did same process for August 7th, and then I'm waiting for another dip to about 21.70 before I jump back into the market and then do this hit and run tactic again. So in the last week, I pretty much made $400 doing this strategy, $421. And if you analyze that, $400 a week, 4 weeks in a month, that's $2,000, 2,000 times 12, because there's 12 months in a year, is an extra $24,000. I mean, this might be worth your guys' time, but this is just something I wanted to add on to what I have been doing with these YieldMax funds, because these YieldMax funds are pretty passive. You just kind of set them, forget them, and then they start producing that harvest and that yield every single month. So I wanted to, I still like the stock market, so I want to get in and out, but I want to be safe. And I think just buying the shares is significantly safer than buying calls on them. I'll run calls if I'm like 100% certain this is going to go up. But if I'm not certain, I usually just buy shares, and I would totally be fine with holding 100 shares of NVDY if I couldn't sell these. So that's kind of my thought process behind it. Let me know what you guys think in the comment section, if this is a little too much work or if this is actually makes sense. But I definitely like the idea of hit and run, in and out real quick. I'm not looking for a home run. I'm trying to make, a couple bucks here, $100 there. Over time, it's going to add up. So let's go back to my project premium harvest. And then, so we talked about profit hit and runs, and the other, I wanted to touch up on this specific goal here. So I've been running this strategy for 3 months. Initially, this was supposed to take 17 to 18 months for me to pay off the HELOC loan. That number actually dropped down to 16 months because the June and July distributions were very high. And then since I've already done 3 months, so the June and July distributions were pretty high. So it brought the average month down to 16. And then now that it was at 16, we already went through 3 months. So now there's only 13 months remaining for me to have a free $80,000 not using my own money, right? So now let's start looking at the numbers. Let's see. All right. I'm not really going to compare about how these funds performed previously, but this is just more a way for me to track. Obviously, I already talked about the different payouts per fund, and you already saw the numbers go through. So let's discuss the totals, cost of debt, and why this strategy makes sense, right? And this is all not using a single dollar of my own money, maybe minus TSLY. But the total premium for the month of August was $7,731. If you take my tax rate into consideration, you subtract $2,860. The monthly HELOC payment I already mentioned, and then the Robinhood margin for $75,000 was only $383.14. So if you look at my total debt cost, it was about $4,040.48. After all taxes and debt has been paid for, I'm a net $3,690.65. And then I'll kind of bring it all together in a moment here. So for me to make $6,551.17, Taxman's always going to take his little cut. So I'm not going to really talk about that here. But to make $6,551, it only costs me $1,179.96. That's not me using a single dollar of my own money. And so that's why I think this strategy with these YieldMax funds are so impressive, is that you can literally make profit every single month by not using your own money. Like, sure, you can put like, a couple $100 here or a couple $1,000, but I think this strategy to like build wealth and build that velocity into your investing strategy, use other people's money. All the rich people do it. Anybody that's in real estate, they borrow money to become rich. Anybody that's big in the stock market, they're using other people's money. They're using your money to become rich. So it's like we're doing the same exact concept, but we're doing it on a different scale and a different level. All right. So now that I kind of got off my little rant there, so for the core foundational holdings, so this is more for like the AMZY. So we reinvested $270 into buying AMZY shares. So I got 14 of them. And then this other $270 I invested back into SPY. And then throughout this whole entire project, this 50-50 core compounding, I now have $2,149.24 of SPY. All right. So looking at the remaining HELOC numbers, you can see that these numbers are significantly going down in a good way. Once I make this payment to my HELOC, it will be $65,355.45 remaining, right? So I added these numbers. I don't remember if I had it on the last video, but this is the end of the month account value. So on July 30th, this is what the account value was. And then I'm going to actually wait to update this number for later, but currently my account value in Robinhood is $87,000. And then I like to keep a track of the net worth of the account minus the debt. So it's basically this $87,000 subtracted by this $65,000 to then get the net account value. Even though the market had a massive dip from when I started to what it is now, I'm still only down $4,000. So that's really insignificant, right? And there was a huge dip, and I do think that we're going to recover from this dip and then continue making 52-week highs and things like of that nature. So hopefully you guys kept your shares. You didn't panic sell, because that's all a dip is a little correction. You buy shares at cheap, keep going. All right, but since this last video, I actually created a couple of graphs because I'm a big visual learner, right? Let me zoom out a little bit so it makes more sense. Okay. So basically with these graphs, I wanted to track progress, because, you know, looking at the spreadsheet, there was just a bunch of numbers. I'm a big visual guy. I like to see this line go up or down or stay consistent. So what this first massive graph on the top is just tracking the individual distribution per month of these YieldMax funds, right? So I'm tracking NVDY, TSLY, and AMZY. So this top line is obviously my biggest position is in NVDY. First month was at 7,000, second month around 12,000, then it dropped back down to about $6,000. So in theory, over time, because I am reinvesting 25% of the NVDY back into this fund, I would like to see this line consistently go up whenever the premium is at like the normal operating level. When I first created this project, I estimated the NVDY payment to be about $1.24. That's not it. $1.24. Yeah, but now it's showing it's usually $1.32. Going back to the chart, yeah. So, and the same thing with TSLY and NVDY or and AMZY is I would like to see this line continuously go up and these numbers to go higher, because I am reinvesting. So TSLY, you better see a massive uptrend as long as the premium stays consistent, right? But for AMZY, it's not going to be as significant because I'm only reinvesting 50% of the shares back into this fund. Right. So that's kind of the thought process, so that I can visually see how these funds are doing over time with different strategies. And then for the monthly premium growth, so this number is just for the monthly premium growth is my total premium for the month. So same thing with this top graph, how I'm tracking the individual performance of these ETFs. This bar graph is more going to be tracking the premium over time for my entire account, right? So same thing with this bar graph is I want to see these bars go higher and higher as there's more premiums and more dates come across, right? Let's see here. These are just kind of like two more graphs to display what I was showing in the Excel spreadsheet earlier. So the core holding value is from the 50-50 strategy, the total amount I received and I invested into core foundational holdings like SPY or SCHD, and then the growth of the core holding. So as I'm getting more AMZY shares with the 50-50 strategy, this number should in theory be going up and up and up. All right. There was a significant dip here, one, because the AMZY distribution was a lot lower than the previous 2 months. And I took out TSLY from this growth of core holdings because I'm reinvesting 100% of TSLY now. And lastly, I have my total net account value. This number for me, like I mentioned, I don't really care about, but I would like to see this number go up. This whole point of this project is to see my monthly income go up. I don't really, if my account value stays exactly the same at $100,000, but I'm making, you know, $100,000 a monthly premium, for me, I don't care how much is in the account value. I care about the premium because then I could use that money for other things. So that's just kind of my thought process behind it, but it is still a metric and you still have to track it. So here it is. All right, guys, that pretty much wraps up the video. I don't really have anything else to talk about for this specific monthly distribution. We talked about a lot of things. We saw my Robinhood account value. We saw the different distributions for each ETF. I came up with a couple of new strategies with the profit hit and run, just reinvesting 100% in TSLY back into itself, and then buying on the ex-dividend date with margin. And then once the premium hits, it basically cancels out the margin so that I can save, hundreds of dollars every single month in buying shares. So let me know what you guys think. Hopefully you guys like the video. Subscribe. I'm going to be making more content. I'm going to be revamping some of this terminology I've been using, and make an actual better intro video now that I have better audio and things like that. I plan on making a tax video. You kind of saw one of the parts of the tax video, how it's like a gradual level. It's not just a single percent. It's like gradual per how much money you make. So I'm going to make a tax video, strategy video. So yeah, there's plenty more coming down the line. We'll be making a little bit more shorts as events are coming up. Oh, the other video I was making is the 4 important dates for YieldMax funds. And I'm going to be discussing the ex-dividend day, declaration day, report day, and then the actual payment day and what those mean and how we can take advantage of those specific events. But yeah, guys, that's the video. Hope you guys enjoy it. Hope to see you again. I will leave you with one cool quote, though. What we do in life echoes in eternity. All right, that's it, guys. See you later.